Good morning, everyone, and welcome to our DAT IQ weekly market update. This is our update for March 12th, 2024. I'm Ken Animo, Chief of Analytics over here at DAT, joined by Dean Croak, who's our Principal Industry Analyst and very special guest, friend of the show, fellow Buckeye fan. We have Cody Kohler joining us. Good morning.
Good morning.
Morning.
Sorry we were missed last week. Dean and I had some prior engagements that we had to attend to, so apologize for that. But we're making up for it by having produce savant Cody on with us this week. I think we're getting a lot of questions about produce volumes. Do you mind giving folks a brief intro, Cody?
Sure. Yeah, my name is Cody Kohler. It's actually Kohler. Everybody botches it, but don't worry.
Oh, I'm sorry. I'm
with ANZ Trucking. Yeah, no worries. I'm on Jolly's show like once a month, and he still botches it. So, but I'm with ANZ Trucking. We're full truckload LTL warehousing brokerage that specializes in produce. We've been at it for a little over 20 years.
Awesome. So as we typically do, we'll go through our market update. We'll bring Cody back for the question of the week and hopefully have a really great discussion about what's happening in those produce markets. So with that, I'm going to move us on to our key points of the week. One thing to notice as we move through the show, as you probably saw on our social media, we had a little bit of a bug with our load to truck ratio reporting. So you're going to see probably some different absolute numbers than you had seen in our last update 2 weeks ago. I think Dean will help bridge that gap when he gets to those charts. But everything now is corrected in trend lines, in the product, in all of our reporting. So we apologize for the inconvenience. I want to thank our teams for working tirelessly last week to get that rectified. So now that we've mentioned that, dry van and reefer spot rates mostly flat last week. Really hoping to start get into that March upswing as we've been dredging on bottom for the better part of a month. Active contract rates flat. While replacement rates for all modes remained negative. Again, you're starting to see a lot of these. It's I think a little bit optimistic to start to see some of these rates get into that negative 5% territory as they start to get to zero and then go positive. We'll see more signs that the market's in correction. The logistics managers index up to 56.5. That's the second consecutive month. And again, this is a diffusionary metric. Anything over 50 is expanding. Anything under 50 is contracting. And then the cash shipment index up 7.3 month over month, but still down 4.5% year over year. And again, all of these metrics are showing signs of being less negative. So starting to potentially move us in the right direction. So with that, turn it over to Dean to walk us through a market update.
Yeah, thanks, Ken. So let's start off with the load to truck ratio. Some of the charts there you can see show that volumes were up slightly last week, but trailed last year by about 7%. Volumes were within 2% of this time in 2020, which of course was the week before the global pandemic was declared 4 years ago. I think it was March 11, which would have been yesterday, that the WHO made the declaration and the market changed fundamentally as we know it. Capacity increased, load posts are up 11%, load to truck ratio ended last week at 2.74. In the refrigerated market, volumes were up 14% last week, but 11% behind the same week last year. They're within about 6% of this time in 2020. Capacity increased last week in the reefer market, up about 8%, equipment post that is, and load to truck ratio up 6% to 4.55. And in flatbed, volumes were up 15% last week, but trailed last year by about the same amount. They're about 24% lower than this time in 2020. Load to truck ratio ended last week at 16.94, up 6% last week. Having a look at a couple of our markets, this week we'll have a look at some of the top 5 markets. Capacity tightened slowly in our top 5 markets on 3% lower volume of loads moved. It's an interesting sign over the course of the first week of the month. Normally rates ease a little bit. Top 5 markets, California, Georgia, Illinois, New Jersey, and Texas. Average line haul rate in the top 5 states was up a penny per mile to $1.70, identical to where it was in 2019. Big market mover last week, Dallas-Fort Worth, loads moved were down about 4% last week, but outbound line haul rates are up 2 cents a mile to $1.37. In Houston, volumes were primarily flat. Also, spot rates up a penny per mile. In Atlanta, rates were flat, also at $1.62 on 4% lower volume. While in Chicago, line haul rates averaged $1.99. That was down 2 cents a mile on 8% lower volume. But one of the trends I noticed last week was that volumes were kind of flat to maybe up slightly in some of the bigger markets, and rates were moving up a little bit faster. So maybe a sign that capacity is tightening. And in the refrigerated market, after dropping 43 cents a mile since the start of the year, outbound California line haul rates reversed course last week, up 3 cents a mile to $2 a mile. That's around 7 cents a mile lower than this time last year, although the turnaround timing in that market is consistent with prior years, as the refrigerated market comes off the bottom at the start of March and then makes a steady march right through until August. In Fresno, the largest produce market in the state, spot rates increased a cent per mile to $1.85 on 4% higher volume of loads moved. In the national market, produce volumes recovered last week, about 8% lower than this time last year, although this is the kind of the bottom of the market before we start to see meaningful volumes. In flatbed, the volume of loads moved across the nation last week were down 5%. National spot rates, though, increased a penny per mile. Solid gains are reported in Houston. That's consistently our largest flatbed spot market. In Houston, line haul rates are up 4 cents a mile to $2.08 on 12% lower volume of loads moved. One of the busier lanes out of Houston is Lubbock in the Permian oil field. Spot rates are up 5 cents a mile to $2.27 on 1% higher volume. And wrapping up with our year-over-year look at spot rates, 2 weeks of flat spot rates do not make a trend, but considering dry van line haul rates were flat in the weeks either side of month end, that's a possible sign that maybe the market has finally bottomed out. Normally the first week of the month, we don't see rates hold firm at about the same level they were at the end of the month. At just over $1.58 a mile, rates were flat on 4% lower volumes nationally. They're about 14 cents a mile lower than this time last year at $1.58. Remember, folks, these are line haul rates excluding fuel. And in refrigerated, volume of reefer loads for all commodity types were down about 16% compared to this time last year, down about 7% week over week. Despite the lower volumes, reefer spot rates were mostly flat, averaging $1.89 per mile. They're sitting about 15 cents a mile lower than last year. And in flatbed, lastly, even though the volume of flatbed loads moved nationally was down 5% last week, freight moving in the spot market just a little bit higher than last year, essentially about the same. Capacity did tighten, though, for the third week as spot rates get set to break through the $2 per mile mark for the first time since the end of January. At $1.99, flatbed rates are about 16 cents a mile lower than this time last year. That's it for the market update. If you want to find out more about what's happening in freight, you can go to dat.com/market update and download our weekly report, including all of the charts that'll be available this evening. Back to you, Ken, for the short-term forecast.
All right. Thank you, Dean. So, as we always do, we do short-term forecasts. These are 35-day forward-looking forecasts. We have history going back till September, I believe, in this chart. The blue line is the historical data. It's a 7-day weighted moving average excluding fuel. We always start with dry van. We have 4 forecast models here. Green is Ratecast, flagship model. Red is the short term, and then gray and yellow are intermediate models between the two. And as you can see, there's some pretty rampant pessimism, I would say, going on. My guess, my suspicion is that as soon as we flip the switch on seasonality, these will start to point back upwards. I think from a Ratecast perspective, it's picking up on just general malaise in the market and just the free fall that rates have been in through most of February. So if you look, we went from $1.75 rolling out of January to $1.60-ish, maybe a little bit less as we sit right now. That's quite a drop. I know it's a bit muted. If you look a little bit back in history, rates started their seasonal climb in October and then didn't culminate until January. So my simple Midwestern math tells me it took 5 months to get that high and less than a month to come back down to where they started. So I think it's confusing the models quite a bit. If we go to reefer, same general thing. We're going to talk about this in more detail anecdotally in a minute. And then I'm going to flip right to flatbed because it's showing the most stable pattern, showing a blip there in ratecast, which I think is interesting. You start to see a lot of flatbed traffic going in and out of big box stores and supply houses this time of year to preload the spring inventories. I'm guessing that's a lot of what this is that ratecast is picking up on. And the other ones aren't really seeing it. They're flat to a little bit peakish. So with that, we're going to bring Cody back, get to our question of the week.
Yeah, thanks, Ken. I've been waiting for Cody to come on for a while to talk about this transitionary market that we're in this time of the year. Start of March generally signals some of the early produce volumes that move the market materially. So, Cody, produce season is off to somewhat of a slow start, impacted by some of the recent wet weather in California. How are things shaping up on the West Coast in general?
So far, actually, it's been a little bit quiet. So I think that's great news. We're not hearing any major impacts that weather had. Luckily, it was kind of south. If you remember last year, the major storms hit Salinas Valley. That's where they really had the major impact. This year, it was more like LA, Fresno, Bakersfield area that got hit hard. So it doesn't look like it's going to have the impacts, even close to what happened last year. So knock on wood. I think we're actually going to have a pretty smooth transition. We're actually already hearing that some of the normal transition players that kick off the season, because it's always like a 4-week transition, right? You have some guys that start moving early. They're already planning the end of March. So that's a good sign that, we shouldn't see too much disruption.
So, Katie, just for those that aren't familiar, talk about the transition, because I think you touched on the winter salad bowl in Yuma, Arizona, and the transition is what we generally refer to as the movement back to Salinas of the traditionally like the iceberg lettuce harvest and some other leafy greens.
Yep. So for anybody who doesn't know, there's 2 transitions a year. It's usually March, April. We're transitioning from Yuma, Arizona back up to the Salinas Valley. And then October, November-ish, it's usually late October, first part of November, we transition back from the Salinas Valley down to Yuma, and it's all temperature driven. But it seems like year after year, we're seeing a little bit more that stays in Salinas, year round. Salinas has been increasing their growing up there year round with certain products. I think, broccoli, cauliflower, a couple of those other hardier veggies. Leafy greens, though, I think leafy greens are always going to make that transition just because of the weather.
Got it. So West Coast, we talk a lot about California, but we've noticed some pretty good volumes, truckload volumes in particular in the Pacific Northwest. What are you seeing up there?
Yeah, the apple crop, from what I understand, was record breaking this year. It was up about 29%. And I know demand's been pretty steady too. It's been pretty healthy out of the Washington, Oregon area all winter long. That usually kicks off. I know harvest starts in August, but you really start to see the impact in October, and that kind of lasts through typically February. And then Idaho potatoes were up. I think that you had mentioned earlier, 32% year over year. I know they had a fantastic crop, not just size wise, but also actual growth. So a lot of good stuff coming out of the Pacific Northwest. Onions do transition this month though, out of the Washington, Oregon, Idaho area down to Texas and New Mexico. So you will see a drop in volume, seasonally this time of year, every year out of the Pacific Northwest. So, anticipate that. That's typically the very last week of March, first week of April.
Right. Yeah, I was just pulling up some graphs while you were talking. One of the things that's impacted national volumes of produce, California generally throughout the year predominantly averages about a third of the truckload volume each week that we see reported by the USDA. Last week, it was just 11%. So It gives you a sense of how much volume we've lost out of the produce market. And of course, a lot of produce moves on the spot market because of the multi-pick, multi-drop, and the time-sensitive nature of it, plus the the geographic location of a lot of the farms in sort of more rural areas. So we've seen pretty good rates have held pretty firm. What are you seeing in terms of capacity out of the Pacific Northwest? Seems to be plenty of capacity in most of the markets that we look at.
Yeah. I think the only market that we've really noticed kind of tight capacity has been Florida. Florida citrus has actually had a really good season this year, but it's been pretty loose. I mean, even Yuma's had a really good season too from a harvest standpoint, but capacity has been pretty loose across the board. Still think we're a little bit oversaturated on capacity.
Yeah, we're seeing, volumes are up. Volumes are up last week out of Florida, but down about 6% year over year. Rates are down about 5% year over year, although they were up about 6 cents a mile last week. So there is some tightness of capacity last week, but still trailing where they would be last year, which I think is pretty standard for across the entire market. Over in Yuma, Arizona, volumes are up about 1.3%. These are volumes of loads moved. Rates were up about 4% last week, up 8 cents a mile out of Yuma last week. They're sitting about 2.4% or about 5 cents a mile higher than this time last year. And to your point about a great season, their truckload volumes on our network are up about 16% out of Yuma, Arizona this time compared to this time last year.
Yeah, well, we had a really good water year last year for Arizona, so
Right.
I think that definitely helped with the crop this year compared to last year.
Yeah. What else do you? So you'll think about? We all should be thinking about the California market. What's your timing in terms of when you expect it to start producing meaningful volumes?
So the first 2 weeks are usually pretty rough. There's a lot of volume that's split, right? You'll get a lot of loads that are starting in Salinas and they got to finish in Yuma. And it's typically right towards the end of April that you start to see a major increase. And then, of course, that's going to bleed right into Road Check Week, which is second week of May, almost every single year. So you tend to see, what is it, a 35% increase by the end of April, something like that. I think that's what we typically see. And then we see that big drop in capacity for Road Check Week, and it's kind of like that perfect storm, right? So the end of April is typically where we start to see a major impact, though.
Right. Yeah, there's only a couple of roads out of California, right? The 40 and the 15 and the 80.
Yep. And they camp out right there. And I remember it was pre-COVID. So what, 19? It was either 18 or 19. There was like an 18-hour wait to get out of the Fresno Valley.
Yeah.
So it's it can get pretty bad.
Yeah, the shutdown of I-80, 10, 12 days ago, resulted in spot rates increasing about 16 cents a mile, refrigerated, that is, outbound from that Fresno market. Adds another 3 hours to, if you wanted to get back to Salt Lake City, if you went down 5 to 40 and back up 15, it adds about 3 hours to get to Salt Lake City. Capacity certainly tightened and rates went up. Cody, just in the general California market, we're seeing year-over-year truckload volumes outbound up about 4%. Rates are down about 3%, though, so there's still plenty of available capacity in that market. Are you hearing anything in terms of, we see a lot of carriers exiting the market still. You're seeing anything in terms of carriers that you would normally expect to be running produce leaving the industry?
We've seen a few. We've seen a few like long-standing carriers, honestly, that we've worked with for a long time that have just the volumes haven't been there for those guys, and but not at the rate that I would have thought, given what's happened the last. We're going on almost 24 months now, right?
Yeah,
like 20 months or something like that. So they've held on. I think the fuel prices have definitely helped with that. We're down quite a bit from where we were last year, right?
Yeah.
But I don't know, man. It's going to be a tough call this year because we are seeing some exit the industry really that I wouldn't have ever guessed a year ago. Some guys that are 15, 20-year vets. And then from what I understand, I think it was an article I read from Jason Miller, we are seeing an increase in the larger carriers, though, right? Like your Night Swifts and all those guys, they're actually adding headcount pretty good speed right now. So it's kind of interesting. We're seeing a lot of owner operators jumping ship to the larger guys.
Yeah. We've seen. We track the number of revocations from the FMCSA each month. Last January was the highest I'd seen in terms of the number of carriers exiting. January 23 had almost 14,000 carriers exit the industry. This month, or last February, we had just 8,800, so almost 9,000. So about 5,000 fewer carriers exited the market last month compared to a year ago. So the rate of exits has certainly slowed, but I'm not sure we can't tell whether that's in the refrigerated market or in the dry van market or flatbed, but it's certainly slowed down. And it feels like the exodus of carriers we're past the worst of it, which should point to capacity tightening once we start to see demand increase in some of those produce markets in particular. I think where, as you told me at a recent meeting, you've got to have pretty good equipment and fairly new refrigeration trailers, if I recall the conversation.
Oh, yeah, anything outside of, potatoes and onions and stuff that aren't, those aren't very sensitive. But anytime you're touching leafy greens, berries, especially, strawberries, blueberries, cherries, all that stuff, most companies, most shippers, most brokers are going to require newer equipment, newer reefers, not very many hours on them, because you're talking, full claim on a load of cherries last year reached $250,000 for organic cherries. So you definitely don't want to put a 10-year-old reefer on that.
Yeah. What else is news? What are you tracking? Any particular lanes where you're watching where there's really tight capacity or an excess capacity that might be, different this time of the year?
Texas always is a hit or miss. If they have a really good onion season, which I'm hearing they're going to, that can get pretty gnarly from a capacity standpoint, and that should kick off the end of this month, and it typically peaks like May, first part of June. And I've seen years where it's increased 50-60%. And then, last year was kind of tame. The year before that was pretty tame. But that is one market that we watch, pretty heavily this time of year. And then obviously anything out of California. California is going to be the hot topic for the next 6 weeks.
Right. Well, whereabouts in Texas in particular? What part of the geography?
Typically down south, so like Far, McAllen area. It does shift up. I know that they started the last few years growing closer to Dallas, the Dallas market. But that's usually like the second harvest for those guys. So that you're going to see that like end of April, first part of May.
Yeah. Our McAllen volumes, loads moved are up about 1% compared to this time last year, but rates are down about 12%. So there's still plenty of capacity there by the look of it as we start now. But we're still early in the season there, because we'll start to get a lot more volumes. I think about 60% of the Mexican produce volumes comes across through the McAllen market, in particular the Far Crossing. So, and I think produce volumes typically peak in about May from Mexico. So we'll start to see that McAllen market get pretty tight. To your point, if they have a good onion season, that could exacerbate that capacity in the Rio Grande Valley area in particular. Yeah,
because melons, it's usually melons that kick off in May and June, right? That come across the border. And so if they have a good harvest, May and June gets really, really tough out of there.
Yeah. Right. All right. This is great. So we will have to get you back on towards the end of produce season to recap on what we thought was going to happen and what actually happened.
Yeah, hopefully it's a great season. I mean, I'm hearing, because they had a great water year last year too, right? I mean, we had those couple of years in a row. I remember talking to you, I think it was 2 or 3 years ago at DATCon about the drought conditions, and that obviously broke last year with all the flooding that they had. So it does sound like, at least from a water standpoint, they're in really good shape this year. Right. So, hopefully the harvest is good and we have a great produce season, because we need one. It's been pretty unstable the last few years. Yeah,
and they've just had a pretty big snowfall in the last month, right?
Yep. Yes. Donners was closed for like a week or something like that.
Yeah, in the Sierra Nevadas. Yeah, it's
pretty gnarly. If I saw some videos, I can send you a couple of videos that were, pretty scary as a truck driver. I wouldn't want to be up there.
Yeah.
Our CFO got stuck at a ski lodge for, I think they got 5 feet.
Jeez.
In Tahoe.
Yeah.
I could think of worse places to be stuck at, but
yeah.
But yeah, it definitely, from a water standpoint, I'm hearing that they're probably going to be good for the next couple of years. So, I'm really hoping that we have a good, stable, just a normal year would be fantastic, right? It doesn't have to be a stellar year. Just a normal year would be great.
Cody, one question I just wanted to ask you before we wrap up, picks and drops. Are you seeing a lot more pickups per load in the produce market and sort of an increase in the number of stops, or is that pretty much consistent?
So last year we did, we're not too far into this year, but last year we actually saw not a significant, but at least for us, we were up almost half a pick, per load. So I think we were 0.475 or something more than we were the previous year. So, anytime you're going to see demand drop like that in produce, you're going to see an increase in picks.
Yeah. What sort of numbers are you talking about in terms of number of picks per load?
So we averaged almost 4 last year.
Wow.
And that's across the board. California and Washington, you're typically going to see more picks out of there.
Yeah.
Yuma, not so much. Seems like the growers, because the Salinas Valley is so spread out, right? It's 25, 30 miles or something like that. But Yuma, it's a very heavy concentration. The shippers all are within 5 or 6 miles of each other down there.
Yeah.
So they do a lot more consolidation. It's easier for those guys to do consolidation at the shippers than it is in the Salinas Valley. So
yeah.
But yeah, I anticipate it to be pretty similar this year. I don't know really where demand's going to fall. I've talked to several of my customers, especially on the food service side, and they're kind of just budgeting for flat, from last year. So fingers crossed we get some demand, but I read the inflation report this morning. It didn't look positive. So
right.
That's going to be the determining factor, I think, this year.
It wasn't terrible, right? 3.2% year over year.
Correct. But it's not moving south, right?
No, I think the problem is the word transitory got way overused. And I think I'm really worried that we're not going to see much downward interest rate movement this year, which I think is going to put a lid on a lot of the optimism that folks had.
Agreed.
But I think the counterpoint there, not to always be kind of the stick in the mud, is if you don't call it a soft landing, what do you call it? Like, what has the last year been from? If you would rewind the tape on our show, right? We're reporting other reporting that's saying macroeconomic recession is inevitable, and by this point we'd be eating parsley sandwiches, right? So I don't know. I think we've probably achieved soft landing, and it's just a question of when are things going to start to ease back down. Builder subsidized 30-year interest rates are back over 5% in the Midwest, which is something I track pretty closely. Usually when it's under, you see far more new housing starts. So I think those interest rates continue to wobble. I don't know if you've been tracking this, Cody, but new cars are absolutely imploding. New car prices, especially for the big three domestic manufacturers, their inventories are rising almost 1-to-1. So they're not selling anything.
Jeez.
I heard a pretty high credibility rumor that's floating around that Jaguar might cease all North American operations.
Oh.
So yeah, it's wild, right? They were going to stop making internal combustion cars anyway, but they might not even transition to their electric platform. New car inventories are just absolutely skyrocketing. I wouldn't be surprised if by June or July we're seeing extreme distress in terms of the dealer network for these cars.
Jeez.
Maybe it's just wishful thinking because I have to buy a new car in July. But
is it going to be a Jaguar?
Yeah, I've been completely I was going to try to get in a new one early, and I'm just watching almost by the week prices fall. It's wild. Given what we lived through, I felt lucky to pay over sticker for my truck 3.5 years ago.
You and me both, buddy. I bought a diesel in 21, and yeah, that was a little rough. The end of 21. I did just get an update though, randomly from one of my shipper buddies saying that to anticipate the lettuce crop to actually be impacted, he's saying that he's seeing potential triple the cost in the next 2 months for a case of lettuce. The rest seems like the hardier veggies didn't get impacted too much, but it does look like leafy greens may have an impact. So,
okay.
So the biggest question, I think, as we roll up to the bottom of the hour, predict win-loss total and final end of season ranking for the Ohio State Buckeyes.
I'm going undefeated, and I'm going number one. I think we win it all next year.
Wow.
Yeah. Nick Saban retired. I don't think Georgia's going to have the talent that they've had the last couple of years. And obviously Michigan is not going to be a roadblock for us anymore. The biggest one is Oregon, though, right? Because we're going to play Oregon. They're in the Big 10 or big whatever number it's going to be called going forward. So I don't know.
I think they lose one game. They finish number one with a national title.
Who do you think they lose to? Oregon?
Oregon.
Yeah. If anybody on the schedule, it looks like Oregon's probably going to be the game that we
I'm also worried about going into Happy Valley. And
that's
playing,
always tough.
Depending on if that's a night game. But I'm watching, and again, Ben Robbins knows this. I'm I've been suspiciously quiet in our internal company Slack channels because I'm just watching what's happening in Columbus right now. And it's like, I don't want to jinx it. It is, they look like an NFL program at the moment.
Yeah, we look like LSU did a couple of years ago, right? That Joe Burrow-led team that just annihilated everybody. And
I'm just hoping this year is fun. Like I don't want to be second quarter of the Youngstown State game tied. Like I want to be, throwing adult beverages back and watching Jeremiah Smith catch 4 touchdowns or something crazy. Like that's my idea of a good timeout. The nail biters, I'd rather watch at home, if at all.
Yeah. I honestly think Henderson could win the Heisman this year too. Our line,
if he stays healthy.
Yeah, our line looks stellar this year. So
yeah. Well, we'll have to have you back on as the season gets rolling, and I'm probably going to go to that Oregon game with a bunch of colleagues. Like a lot of DATers went to Oregon, so it's either going to be a happy flight home or a long rest of the college football season on our corporate Slack channel.
Well, fingers crossed. It's a happy flight.
Yeah, for sure. All right, Dean, you want to bring us home or running along?
Yeah, Radio Nemo this week. I'll be on with Jimmy Mack on 8 a.m. on Thursday, Sirius XM 146. Chris Kaplis has got Jeff Short from ATRI on talking about battery electric vehicles. On next week's show, Josh Rickards from Rickards Transportation joins us. Don't forget Road Check Week, May 14. Of course, next week is the Mid-America Truck Show in Louisville, 21 to 23. I'll be heading down there over the weekend with my truck. We've got a booth, also DAT booth. Make sure you swing by booth number 65216. Come and say hello. And that's it, Ken. Back to you to wrap up the show.
All right, Cody, how can folks get in touch with you?
LinkedIn's easiest. Just find me on there, ANZ Trucking. You can hop on our website, contact us there, but LinkedIn, I'm always on there. So
awesome. We'll look forward to connecting with you and all of our other friends at TIA here in less than a month's time, which is super exciting. A lot of other fun stuff between now and then. Trade show season is certainly in full swing. So we look forward to that. And we will see everyone next week at 10 a.m. Eastern. Bye, everyone.
Bye. Thanks, Cody.